Joining us first on CNBC is PIMCO CEO Manny Roman. Talk about good luck having the right guest for the right time. Good to see you, Manny.
Good to see you too. Thank you for having me.
Significance of the 10-year yield surpassing 3%.
Well, it's been a very big move. I think the market expects the Fed to raise 50 bips, and then we think that the Fed will raise rates by 225 basis points for the year.
Meaning
and then some
there's going to be a couple of 50 points.
There will be more
hikes.
50 points, maybe even a 75 basis point, and there's a lot of things we don't know. And it's a new market. It's a situation in Russia that doesn't seem to get better, and the Ukraine crisis. And then you have a lot of unknowns. What it's going to do to consumer. I know you have guests coming on your program to talk about the consumer. The question is always the same. How much rates hike can you have before things start breaking? And that's really the interesting conundrum.
Will things start breaking?
Well, if we raise rates significantly, eventually the consumer will slow down.
And what does that mean? Are you talking recession?
You're talking bordering on a recession, 1 or 2 quarters of recession, like we saw in the first quarter, and the consumer being much slower going forward. And I think that's perfectly fine. And I think that I always have this image of someone trying to land a plane when there's a lot of wind. It's not easy. So the soft landing is possible, but it's not always easy. And I think that's also the opportunity for a lot of us to find place to invest and make money.
Well, right. So how is PIMCO navigating this? Where are the opportunities? First of all, are you still underweight bonds? Do you think this will go farther?
Look, if I had a crystal ball, it's slightly broken because it's been a difficult market to predict. Of course, market overshoots, and it would be difficult for me to tell you the exact moment when to add duration. We've been underweight. The reality is we're not that far away from a point where it makes sense to add risk. And then the fixed income market has an ecosystem with many different opportunities, from investment grade to mortgage bond. And a lot of these things happen to be attractive now and are going to be more attractive over the months to come. And the skill is, of course, how to add risk to a portfolio and how to find opportunity. And in a volatile world, it makes a lot of sense to be able to add alpha. And I think that's what we look forward to. And that will be the opportunity for the months to come.
The bond move, though, has been fierce and intense. Do you think we're near the peak, at least, when it comes to Treasury yields in this episode?
Once again, my crystal ball hasn't been working so much. I wasn't around in the 70s, but I was around in 1994, where I remember the move. And the move was pretty wild, but there was really no inflation. And the reality is we don't really know when inflation is going to come back to a normal level, whether it's in 3 months or in 6 months. But that's all we know right now, and we'll have to navigate this and look at the data and make sure we make the best possible decision at the time.